Okay guys, here's my top 10 US stocks I'm buying right now with the market down. Now I hope everyone's family is healthy and safe and you guys are all taking care of yourselves. But if you have a little extra money, like I do right now, I sold some stocks on the way down. I'm looking to find some great deals, and there are some fantastic stocks to buy right now if you can afford it. Again, guys, this is for entertainment purposes. This is what I'm personally buying, my top 10 US stocks that I'm buying right now. All right, so let's go with number 1. AT&T. It's a communications stock. It shouldn't get hit by any type of recession because people gotta pay their mobile bills. No one is not gonna pay their cell phone bill. People will reduce costs everywhere, but no one wants to be cut off from the world when things aren't going well. So this stock should hold up, and the yield is insane. Come on, like 6.8%. Now Yahoo's always a little bit off, so always take that number there, the cash you're going to get for the year, $2.08, and then divide the current share price into it to get the real percentage of the dividend. Because sometimes I find, I don't know if it's like locked in the morning for Yahoo Finance, but sometimes it's wrong. But it could be right. So 6.8% on your money for the year. They pay quarterly. So that's my number 1. I have to build up my position in AT&T when it's under $30. It's a fantastic deal. I don't think they're going to cut the dividend. And again, guys, that's something you really want to watch for. You don't want the company you're buying to cut the dividend. And they could. So be very, very careful. So I'm trying to pick ones that won't cut the dividend. And I'll be honest as we go through this if I think they're going to or not. I think AT&T will be safe, but I don't know. Again, so this is my number 1 pick. Not really my number 1. I didn't really order these. These are just my top 10. So let's move on to number 2. We're going to Johnson & Johnson. I don't think they're going to cut the dividend. And because the stock prices dropped so much, the yield's pretty good at 3%. So this is the maximum chart. I always do this just to get my head in the right mindset. Let's actually go back to AT&T for 2 seconds. And oh, this is on the max. So it seems to be holding its own. This goes all the way back to, so at one time it was going at $57. Woo. Then the tech, 9/11 tech thing, it crashed there, but it's been slowly, you're not going to get much growth in this stock, but it's the yield, the juicy, juicy yield. All right, let's go to Johnson & Johnson. Oh, look at that chart. It's beautiful. This is a pharmaceutical company. They probably aren't going to cut their dividend, so you don't mind putting money into it. Here's the 5-day. Let's go to the year. So you're getting it at a great discount. It was at $151 just on February 3rd. So you're now getting it at $123. I was nibbling here at $113. It hit 113 midday, I believe. Intraday, as they say. All right, so this is a super deal. They are best in class. You want to add to your position when it's getting hammered because things are on sale. Let's go to number 3. We've got Wells Fargo paying a juicy, juicy 6.6% dividend on the year. And look at how much they're getting hammered. So they were at, last year, $54.46. It is now at $30, guys. Look, it's one off a cliff. It's paying a fantastic dividend. Now, honestly, the financials may cut their dividends. I think Wells will be fine. I'm hoping they'll be fine. It's not the top bank in the States, but I'm hoping they hold on here. And they just declared monthly distributions for probably their next payment. But I'm still building up my position in Wells Fargo right now at this amazing dividend. All right, so that was 3. Let's go on to number 4. JPMorgan, number 1 bank in the States, best in class. So when you're buying this, you're buying quality. And guys, you have to be careful because we could hit a recession here. And you want quality, quality, quality. You don't want companies that are going to go bankrupt. You don't want companies that are going to cut their distribution. if you're buying this, in my opinion, you're going to be safe. Your money's safe, and you're going to be making 3.6% on your money. This is the best in class, better than Wells. This is my number one. Normally, this is pretty expensive. The banks have done quite well recently after the Great Recession. It took them a while to get to the point where they're actually doing really well. And let's look at the max here. So it hit last year $131. So you're getting like $40 off from last year. It's down to $91. Best in class bank at 3.67%. Again, as you can see, guys, my picks all I'm going for usually a big yield and quality. So I don't mind, again, JPMorgan, I want more of it. And you should have more too. Again, guys, this is just my opinion. This is for entertainment purposes. Only buy stocks if you're prepared to lose and win, and it's a crazy beast. It's all on you guys. This is just for fun, but these are what I am buying. I'm sharing that with you. So we're on to 1, 2, 3, 4, 5. We're on to Mickey D's, McDonald's. This is on sale, guys. I have a hard time buying this when things are going well because it's so expensive. Let's look at the max chart. So let's see. As of last year, it was $214. So roughly 40, and then let's say 10. You're like $50 off, and it's paying a 3% yield. So I want to build my position in McDonald's. They're not going anywhere. I doubt they'll cut the distribution. I know they're getting hurt with, you can't go in the stores, but they're still doing takeout and drive-through, and I want to build my position in McDonald's. I'm currently buying McDonald's. Let's look at the 5-day chart. Actually, maybe the 6-month. So it looks like it hit 137 for a brief moment. It retested that support down there at 137, and then it shot up to 164. So if it drops on Monday, I may be buying more of this. 3% dividend on McDonald's. That is my 1, 2, 3, 4, 5. Let's go to the next one. Tap. Now again, as you guys can see, I'm picking different categories of stocks. I don't want to put everything into oil. If you're in oil, everything in oil, last year, you're getting killed. You're down 60, 70, 80% on your money. Maybe not that low, but 50, 60, 70%. You could easily be down on oil. So you want to scatter your money by stocks in different categories. Hopefully not ones that are getting hit by the current situation. I don't know if you want to go into carnival stocks or airplane stocks. Now's not the time for that unless you've got a long time horizon where you want to wait 5 years, and those would do very well, but I'm a little leery. There could be bankruptcies here, guys. The things could get bad, and things could go, a lot of companies could go absolute bankrupt. If they owe way too much money and they can't get through this, they will go bankrupt and they will no longer be a company. Or they'll have to sell to someone else. It could be a horror show. All right, let's talk about Molson Coors beverage. So, I don't know about you guys, but I've been partaking a little bit more in alcohol, trying to get through this lockdown. And I've noticed that the liquor stores and beer stores around myself there's a lot of people buying a lot of stuff just to get through this. A lot of us have our kids with us at home when they should be in school. So they're driving us bonkers, and we want a cold beer at the end of the day, and they're paying a fantastic 5.9% dividend. Juicy, juicy, juicy. Now, I'm sure you guys know about dividends if you're watching this, but just in case you don't, most companies pay quarterly, getting paid 4 times a year. So they'll split that $2.28 into 4 chunks and pay it to you every 3 months. Some are monthly payers, but I believe everyone on the list so far, quarterly, 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 quarterly. There's a trend. They're all quarterly, and that's normal. So juicy, almost 6% dividend. I think they had a good quarter last quarter, and they are getting hammered. They were already on the downtrend a bit, but geez, actually they $57. So this is on sale. Let's look at the max chart. Look at that. Yeah, they've sort of been trending down. because millennials are into like spritzers, like club soda and vodka with splash of juice, that type of thing. And they're not into the beer as much, but there's a lot of beer drinkers around. And craft breweries have sort of stolen the thunder from the traditional beer companies. But in a pinch, when people are tight and they don't have much money, I suspect they'll go back to the tried and true, the cheaper beers like Molson Coors. They're not going to be paying a crazy amount for craft beers. I think it'll be in their favor. In the meantime, you're at 5.9% for the dividend. Let's go to the next one. What are we on? 1, 2, 3, 4, 5, 6. We're on to pick number 7. We're going to industrial, and it's 3M at a 4.3% dividend. This is, they've been getting hammered for a year or two. Their high was, going to give me a date here? Give me a time, but not a date. Oh, this is the 1 day. I'm looking for, let's look at the 5-year. It topped out in January 1st, 2018 for $250 US and is now at 133. So I'm waiting for, hopefully it will recover one day. They'll get their act together. But in the meantime, we're getting paid a 4.3% dividend, and it's industrial. So you're in a different class. You're buying it when it's low. They're very good as shareholders as far as upping the dividend. And I'm hoping I'm adding to my position at this price. I was buying this stuff at $200 a share a few years ago, and then at $180 I was buying it, and I was buying it at $150, and now I'm currently buying it at $133 to build my position, and I'll get paid to do it. All right, let's go on to, is this what, 7? 7, 8, nope, 8. 1, 2, 3, 4, 5, 6, 7, 8. Here we go. Apple. Apple, I owned Apple in the past. I bought it at $140 back in late 2018 during the correction. Sold it at $206, all of my position. And then it skyrocketed after that. So it, it went out of my reach. I couldn't catch it. I'm a huge Apple fanboy, so I will say that. Let's look at the 5-year. So right, it hit 140. I guess it's because it's a 5-year chart. It's not really showing, but it was at 140 at one point. 145 I was buying through here, and then I sold it around here, and it skyrocketed up. I lost it, but I made a profit. So if you're making a profit, it doesn't matter, because we can't time the tops and the bottom. You're crazy to think you can. You just keep buying quality companies, and you'll be A-okay. Again, this is for entertainment purposes. Don't take my word. Spend your money. Make your own decisions. There we go. Now, the yield on this one is not that good. It's only 1.19%. But you're going to get growth if it recovers, which I think it will. So let's look at the 6-month. And so it was at $3.24. So you're getting it at a huge discount right here. Hopefully that's the bottom at $2.24. And after the flu, which hopefully wraps up, from what I've heard, it's going to peak April, late April, and then in May we're going to see a decline if it's anything like it was in China. If you look at how the virus played out. Anyway, so this is something I want to buy more of and get back in the Apple game, because I am a fanboy. I'm a huge Apple guy. So let's go on to pick 9. We're still in tech. The last 3 are tech. So this one is a yield play at 5.74% on your money in cash for the year. And it's at 108.03. And I'm building my position. I've been holding this for a while. They pay a fantastic dividend. But they're also a bit of a growth play lately. I know it looks like it's going down, but they bought Red Hat, which gets them into the cloud computing range. And I think that's going to do well for them. Because they do old school company stuff with mainframes and software. But now this cloud computing thing, they could get into in competition with Amazon, with their AWS service, and with Microsoft, and with their Azure product. And so I think they're going to be in the game, and this could be a growth play / amazing yield at 5.74%. Now let's go to my final pick. This is number 10 for my top 10 U.S. stocks I'm buying currently in a market downtrend. And it is Microsoft. I said it before. It is only a 1.31% dividend. But again, if you look through my technique here, my strategy, IBM was a huge dividend payer. Then I'll go for one that's Microsoft, which is a low dividend payer. Low dividend payer for Apple. High for 3M, 4.3. TAPS high, 5.9. McDonald's it's sort of there. It's usually low, but it's at 3%. This one is 3.67%. They're almost all high payers except for those last ones. 6.6% for Wells Fargo, huge payer. This one's not so much, but 3 is good. And this is a big one. So I mix high yielders with sort of low yielders that I'm looking for growth and stability. Let's move on to the last one again. I'd like to say a little bit more about Microsoft. 1.31%. Their cloud computing has been doing fantastic. Let's see, their high was 187, so it's like $40 off, $38 off, and they look at that chart. So things really took off in 2013 and started to ramp up. They're doing fantastic. So this is a growth play, pretty much a growth play. But they're going to give you some money. Inflation normally is at around 2%. So, you know, you're hoping to get some growth. And guys, do you guys hold any of these stocks? Comment below. Are you happy with what's going on with them? What do you guys think of my 10 picks that I'm buying? Please comment below. What 10 picks are you buying? Which one? Or even just give me your top 3. Your top 3 favorite picks you're buying right now. Or when a market's down, what are you looking for? These are ones I buy. These are quality companies that I've got hammered that I normally don't buy because they're too expensive in my mind. So again, like AT&T was up to, we'll just go through a quick overview. Just a month ago was trading at 37. So like these are fantastic deals on some of the best companies on the planet. What are you guys buying? What do you think of my 10 picks? Please comment below. And guys, like the video. Please subscribe and hit that bell. Ding, ding. And I will be back with more of my picks. I'm going to do a top 10 Canadian stocks that I'm buying at the moment. So please comment below. I will talk to you guys later. Thanks so much for watching, guys.